Okay, the stock reviews for Thursday, 16th of February. Begin with the market. We had the tops put in today. I believe that is the case in very dramatic fashion. And we have the first close below the uptrend line. Thought that yesterday was, but had bad data. This is the first close, and it's quite dramatic, as you can see. Definitely could continue tomorrow. Could be snapping back to a degree. Can't see it on these 2-minute charts, but we did come down to end of the day yesterday. So we're right back at that same level. We could catch up some upside before pulling back farther. Might even have a day where it dithers, doesn't really want to give things up quite yet. A lot of things were unaffected by this drop. The press seems to talk most about Apple being the cause of the drop being so big. That's nonsense. Things were ready to break and fall. Apple is just a big marker in the numbers of an effect that was overdue. And it's just, it's a classic top. It's nothing to, Apple was clearly affected in a large measure, but that's only because it was at an extreme high, an all-time high. So, it's not like this is restricted to Apple. But there are quite a few things unaffected by this. First one being Broadcom. This tells the story just looking at that right there. Expect some downside soon. You might have some retracement. You might have to have a kiss goodbye on this line. Really don't know. They're hanging the hat for this on the problems in Greece and some downgrades, some potential downgrades by Moody's of a lot of European banks, but they did that last week. They did 6 downgrades on major banks last week. The market will find a reason, or the pundits will find a reason to hang something on that is actually going to happen anyway, because the technical indicators show that. So that's just mostly nonsense, I would say. But it might dither before pulling lower, but the highs are in. And you can see that very clearly in the day's trading. This is exactly how highs happen. It's just going into the stratosphere, but then again, all of a sudden it doesn't, and it just collapses. Generally midday. And look at the timing of this. The timing of this is perfect. Right here, 12 o'clock. 12 o'clock on the button. Right there at the top. And one of the things that might have been noted by this at the beginning of the day, looking at how you start out this day, you have an initial movement up, which retraces over 200%. Then retraces to the top again, more than 100%. Was that 140, 150%? Retraces again past 100%, 120%, let's say. Goes again all the way up, another 140%. Multiple 100% retracements. This is widening mouth instability, call this, producing a megaphone, and being off a gap at an extreme high after a month-long rally. Okay, that's instability. Well, guess what? It was unstable. Here's your instability right here. Okay, topped out, and these reversals with widening mouth instability, they come from the opposite edge. They reverse from the opposite edge, and you can see this is very close to that opposite edge there. Depending on how you draw these things, it's actually right on it. If you want to use these, this was a little higher. So clear those out. Use those, and you see it's just right on it. Opposite edge reversal with widening mouth instability indicated by this open here. So you could have keyed off of that. In fact, I actually didn't make anything of this, but I called the top. So haha. Other reasons kept me from making something of this, but there you go. We have the top. The tops are in. So let's see what happens. Broadcom, however, didn't really care too much. It gave a nice movement up above 37. The key for Broadcom here for the last several weeks has been 37 and 38. What do we have? We had a gap up open right near 37, right on 37, slight below. Very quickly just began going up above 37. Very nice. In exactly the same way that we've talked about, a lot of these things have been moving upward, which is you start an initial downtrend line, come down a certain amount. It's well defined downward. You can see this here, very well defined, gap above it, and just start moving up. Did it in spades. everything, tons of things have been doing exactly that, which is exactly the way the market overall did its move. Here we go. We're coming down. This has an uptrend that is building, but what's the key? You get the gap above. You don't even have to come down to retrace here, but then it just starts moving higher. So this method of moving higher has been in evidence for a lot of things for a long time. Broadcom had it today. Very nice. So if we don't collapse immediately tomorrow for more downside right away, Broadcom could very well still be headed back up to 38. Maybe it wants to challenge these highs and needs to go higher. Like I said, not everything was affected by this plunge today. And if you look at Broadcom on the 1 minute chart, you see it. Here's the time period when things were falling apart. Here's the peak of the day. Here's the rollover and the plunge. Okay, so the plunge of the market is happening all throughout here. Broadcom's going higher. This little movement down, which was just as quickly rejected for new highs, what's this period? What's this time frame here? That's the initial plunge rollover, and it was completely rejected. If you're looking at the market, that's this plunge right here, this last bit of plunge. Right here is the timing for that. Okay, so yeah, the market has a catastrophic final fail, which it rebounds from very quickly. Something this strong and that catastrophic, well, it'll affect all sorts of things that aren't necessarily really being affected. So Broadcom was one of those. That was the timing. But if you look here, we can kind of marry these up here. The break on Broadcom didn't fall from 37.50 until an actual no fooling recovery failure. This tip here on the market finally made Broadcom start to break. Well, but what did it do? It recovered a bit up here. It didn't come all the way down to its open or close the gap even. What did it do? It bounced off 37. 37 is still the key to Broadcom trading at the moment. So for tomorrow, you pay attention to this uptrend line right here. This parallel line off of this significant downtrend tail, which was, if you draw this downtrend line, look at this. You've got two of these. This is basically on that line. Same type of deal. You're getting some kisses goodbye to the upside from the top of a downtrend line. Okay, you're going higher. So this is your operative line parallel to the main uptrend that began from this cradle, this low position here with these gaps that was strong above 31 and just went. This is your play for evaluating the break potential for Broadcom tomorrow. 37 is a key level, of course, as well. But if this doesn't open higher and gap higher immediately on this line, as you can see, with this time frame here, it could be problematic for Broadcom. Gapping here and not going up immediately, or not gapping sufficiently high above this line and continuing up, if the market's weak, well, Broadcom could still be rolling over and falling. But this is what's operative. So completely dependent upon Broadcom's action in relation to that line for tomorrow. SanDisk finally had its breakout. This is the downtrend line, maintained, had been channeling between 46 and 48. We talked about 45.50, however you want to define that, but that this pressure was building against this top. There wasn't really pressuring anything to the downside except maybe a higher channel. Okay, it's going through this channel, but the pressure really clearly is to this upside. Gapped above it, came right down to it, immediately blasted today, heading up to these MAs, just like we talked about was the likelihood when this finally broke out of this type of pattern. It's perfect. It did give it back with the overall market, however. Let's take a look at SanDisk on the daily. See what we can see with that. But you see that it maintains strength. It is cascading down. It did not enjoy much from the movement up right at the end of the day, from the bottoms when we reached yesterday's level of support in the afternoon with the market down here. SanDisk didn't really benefit from that. Interesting. I need to take that into account. This could be an excursion back above, and it's coming down to touch back on the top of some of these levels here. Maybe it needs to come back down to 47, which has been a key level before going higher. Maybe it needs to come down to these bottoms here. If you're on the downside of this line tomorrow, with some acceleration perhaps, given this peak through the close, since SanDisk did not benefit from this movement upward really, Not very much so. It came up back here and that established the line, and then it retraced and went lower. This is key, I think. The market's low at that point of the day was higher. We're going up here. But Broadcom's was lower. So just how important is that going to be tomorrow when essentially you have this channel that it maintained from the break levels? You've got some pretty clear lines that could carry themselves into tomorrow's action early, and judge it by that for what you think it may do. Anyway, breaking back above this line and touching it for the upside may very well indicate we're going to have a repeat of some nice upside early, saying, okay, I drifted down the whole rest of the day. I didn't collapse, and I wasn't super panicky like the overall market, not affected as badly, clearly. So if that means upside strength, which it would have maintained if the market had not collapsed, well, tomorrow maybe this candle is fulfilled and you open relatively flat and then start moving back up again. You make up some of this territory that was lost. Any number of things might need to go on tomorrow, but currently right now, here's your operative trend line for the downside, and you do have some nice upside potential here. And trend is upside to get some gap closure. Maybe head back up to 50. Something burning? I don't know. Anyway, that's SanDisk. I think it will be decent tomorrow, upside. The bias would be upside. Here's X. X came back down after falling below 28 from its open, tailed very near this ultimate uptrend line. It might need to touch it again tomorrow. We have this slope right now through these tails. And here's another key, is this level through here. If you come back to X and you look at how this failed and rolled over some of these levels back here, you've got a level. Where did it really roll over? The last one you could have really drawn for this, let's put it here. Nope. How does this need to be looked at? This is a significant line right here, I would say. This being excursion, but you've got this line here, and you see how it was referenced here. Really, your break level's right here. Where's that? Comes over. You've got wicks against it in various places. Opens, close. It's right in this level here. And where are we at? We're right there. Yesterday it tailed off at the top level. A little bit lower is where it tailed off today. Tomorrow, as you can see, those will be very nearly coincident with the massive uptrend line. So if you're going to come down to this line, you've got some coincident levels of support from clearly an important level with a break and fall. These are important, this intersection here. This level here maintains strength, and it's coincident with that. What do you expect? I would expect some upside breakage, and you evaluate that by the downtrend line. Some interesting things about the downtrend line that began with these two candles from X. If you draw through the middle of this candle, which is the appropriate place, through the tail for the wick here, what you might notice is the bodies of these candles after this day having opened right on that line and fallen, the gap up the next day moved the body of X out beyond this line. The body of this candle primarily beyond that line, the body of this candle wholly beyond that line. Interesting progression. So you do have some reluctance to engage back below this line, and if tomorrow you have that moving back up, you've got a couple lines here. If you want to take it from the same location here, you've got that line right there, which does go through these midpoints, goes to that wick there very nicely. This might be your operative trend line. You could maybe have a parallel one to this one, which would just be very close. Anyway, they're very similar, but living beyond this line, coming down to wick down here on the support, if that entire body of the candle tomorrow with the open and the wick is going to be on the other side of this line, that's a nice little recipe for maybe trying to move on back up here. This big fall could get some retracement on that. Could get it pretty quickly if you're tailing, double tail, triple tail really with these three, cut out some of this stuff. Triple tail down here with this one probably be right near the same low, prior day low, right through that level of support. So a double bottom one day to the next, starts moving back up, get some real nice upside from that. Okay, alternate scenario, if it really can't do that, fakes that out, and then starts moving down, you get a big ass drop very quickly. 26 is not that far away. You fall down below this. Maybe it tries to hold 27, can't hold 27. Okay, where are you at? 26? Sure. You got this down here. Go put the initial line again for the first 2 points. Well, what could you do tomorrow? Could you come down because you need to actually give this another kiss goodbye from an extreme, kind of like this candle back here? Yeah, it needed to fall to an extreme before it could actually get anywhere and start going up again. And how did this do it? You've got a bottom trend line through a lot of this action right here, go through these wicks. Well, guess where you ended up? Right there. Downtrend line on the extreme for a broken downtrend movement. Well, okay, maybe you need that as well here. Fall below this critical level, fall below and maintain below this uptrend line. Oh, well, hell, people give up on that sucker probably. You could have $1.50, $1.30 movement down here to 26, maybe even lower depending. But you can see the vertical with this line right here is, positioned nicely. That's the edge of that candle. Right in the middle would be over here. 26, yeah, that's easily within reach if we're not going to get some movement up. And of course, the other alternative that's, not fun is the fact that it goes back and forth throughout the day, produces essentially a minor candle doji that doesn't actually give you a whole lot to play with. That's possible too. So all three scenarios, good up, good down, bunch of nothing. I guess we've covered all bases. But anyway, that's how those would probably play out. Those are the relevant levels. See what is next. What's most interesting? Best Buy. UNH. Let's talk about UNH. UNH just didn't give a damn about this fall. I'm not quite sure what to think about that. It might really start to care tomorrow, but UNH just really didn't care. Very interesting. So let's take a look at its overall pattern. Okay, yeah, it looks like it's headed to 60. It just didn't give a damn. So, and of course, healthcare is nowhere near anything like tech and Apple. And if you see here, the Dow doesn't look anything like the composite lately. Yeah, this could be a rollover, but it could be a hop and maybe it wants to test 12,900 some more, whereas the composite could pull back solidly. I'm not interested in gain angles. Let's try some horizontal trend lines, price levels. There we go. You could pop back up here off of these tops again, channeling through this mid-range. Come on up. And in the midst of that, doing that, no catastrophic fail on the Dow, which the United Health is much more a Dow stock, certainly not a tech stock. Yeah, United Health maybe wants to come on up and maintains itself. We do have this operative trend line, but if it breaks out of that, we've seen this. It needs to go. It needs to get to 58. It needs to get to 60. Okay, well, guess what? It wasn't affected by the crash today at all. Maybe that's what it's doing. Very interesting on UNH. Maybe tomorrow, if things are good upside, it blasts off this line and you get a real nice, 50 cent candle off of that, 60 cent. That's not bad for a $50 stock. It's not terrible. But anyway, that's just there in the mix. Netflix wasn't particularly affected either, which is interesting. And you see it maintained its presence, at the very least, right at this downtrend line, that if it is above that tomorrow, well, you're working off an uptrend like this. Depending upon that open, this wasn't affected too badly by the collapse. Maybe it needs to curve up to 130. Could be have a big candle on Netflix tomorrow, upward, to recover this big down candle that did not turn into a collapse, as you see. Hit the 118 level of support, 118.20. That 20 cent difference seems to be important throughout this structure. But maybe we're going upside for Netflix. We do have a wick up there, and an attempt was made to get up there today, as you can see, and it was quite strong. Beautiful cradle, very nice. The market kept that from happening today. It could happen tomorrow. And if you want to draw this trend line, we're not right at it yet, but if this is going to operate, which the tail shows it's right on the trend line, we stay above that today, you've got both those things in effect. You've got a main line trend line from the bottom, taking it upward, moving above a well-defined downtrend line that does not lead into collapse, which has been the formula lately for upside. Okay, very nice. That might be what Netflix is looking to do. What else? Nope, don't want to be over here. XOM, not looking real good. Working on a downtrend line, peeling over, broken some significant uptrends lately. To be at this point, could be falling to come back down to prior support around 82. Could be real nice. Break this trend line tomorrow early. Can't handle the 50. I'd say if you're living below this line with what this is looking at the moment, market wants downside. XOM could have a really big, nice fall tomorrow. And that also would be, if you look at that, based on today's open, a lesser slope false recovery. If this is a recovery here to get, make back this fall and plunge, well, so is this, but it's of lesser slope. Slope degradation, peel over, cradle down, and here we go, break this trend line, and this could be a real nice cradle. Maybe we're coming down to 80. Who knows how good this cradle could be, right? Get rid of this junk, take it a little more clearly. Extreme here, double top, comes back down, tries to recover some of that, can't, has a lesser slope, exhaustion recovery, exhaustion rollover, which is actually just turning into a cradle with a downtrend supporting roll. And how far do we come down? Are we at 81 or 80 by the end of the week or early next week? Sure, could be. Depends on how bad this market is going to take things to the downside, how quickly that happens. McDonald's, talked about McDonald's yesterday based on the action and a false close on yesterday that made it look as if this was a red candle. Talked about how the prediction for that was cradle down, if that were real, cradle down, and we come down to touch 97 here before too long, because McDonald's has shown that it is not really willing to maintain 100 and above at this point. So you've got this downtrend line here, parallel through the bottoms of these significant tails. You've got this region coming to intercept 97 or so, a little farther out, and you've got some definition in there. There's some fudge factor for that, but if this is a real cradle, this was looking like it was going to recover very nicely, move higher. No, it didn't do that, and it broke here. It did this before the market got weak. The market was real strong in these few days. Today, with this candle down, was the break on the market, but the market was going up for these prior days. McDonald's was bad on those days. McDonald's was weak for those days, right? Here's the Dow. The McDonald's is a Dow stock. So it was pretty bad and weak with this. So if the Dow's going to roll over, there you go. Come on down farther here, 12,600 maybe. McDonald's could go with that. The composite, however, was different and looking strong. So McDonald's is going with the Dow, and the Dow is weaker than the composite. If things are all going down, McDonald's goes with the Dow, rolls over, it's 97. So that could happen relatively quickly. I think tomorrow it will see 98, regardless of anything else. There's a real good possibility for that, of seeing 98 at the very least. So, might be worth a look. Visa took a while to do it, eventually did stage higher off this really excellent candle from yesterday. We talked about that yesterday. Didn't do it particularly well or early like I thought that it would. Certainly the market was in support of Visa doing that. Well, I suppose not too much, because we did have the chaotic instability, multiple 100% retracement nonsense early. So I guess it wasn't too much in support. A lot of the momentum was taken away by the gap, and you can see a lot of that was reflected in the price action of V, but it eventually did do it and gave it back just as badly. And we ended up lower than the gap up, and we ended up lower than yesterday's close. So this really looks like enthusiasm for the upside is either completely over right now for V, or severely tempered, certainly. This has some potential to break out above this 115.20 or slightly higher to go back above the close here after this really excellent up day, and maybe need to take a shot at some of these levels up here. But you can clearly see you've got some downtrend lines at which you can tell, some very, very solid downtrend lines at which you can tell whether that's even possible or not. Living above this downtrend line, I suppose it could be. But if it really can't early in the morning, you'd have to break this downtrend line to even contemplate any of that, to be up here in any substantial way. You'd have to break it pretty solidly. So anyway, UTX, beautiful candle from UTX. UTX was played today, not effectively in particular, but the key moment was recognized. And something was made on it. But you see the big drop from UTX, which has a quite messy attempt at recovery. Let's maximize this here. And after this important movement back up to try to recover some of this, off of this here, well, what do you have? If you were drawing a line like this, you had, here you go, an attempt to get back up to it, which was quite dramatic, and then broke quite dramatically as well. So you've got a lot of nonsense going on here over a big range. So that large amount of movement can certainly persist, especially with a give back like this off the open. So what do we have? It was quite messy, but you can see some rollover here and some movement on down, with the key being this really seemed to have been its just really last chance. It's moving downward through these angles here, and breaks way back above this and really just can't do it, and immediately falls back to these levels. That was the key moment, having to come back down to this level, and the look like it would not maintain this. Okay, we were in here trying to move down, expecting serious problems the rest of the day, because it had an awareness of where UTX was, and the fact that the open was just really horrible. So not maintaining 84, and then not maintaining this level here, that's right at 84. Beautiful, perfect psychological level, and very much seen on the chart where you're going to have to maintain 84. It's off the prior day's lows. You're going to have to maintain 84 with an open like that. Otherwise, you've got serious potential for the downside. And it was fulfilled. And you see 84 was the critical decision region. Took a while to decide, but having come straight back down to it, the resolution off of this, with 84 being so important, was, oh yeah, you're going down. Don't know precisely how you get there, but you're going down. So anyway, it's what it did. Very nice, beautiful, and that, having that awareness of UTX being where it was, and what the ramifications of this really could turn out to be, and then the key signal being this big movement to give back some of these others, like, okay, yeah, you really are done, and here we go. I'm done. Yes, I really am done. I'm really severely done. So, nice. UTX tomorrow. What would happen with it? We are down to a gap region with some horizontal support. Big horizontal support back here. Nice horizontal support as it's staged higher. I would expect a movement back up. I would expect a retracement of this of 50%. I don't think the market's quite ready to say, yes, I'm going to run screaming for the exits. And so I don't think it will. I think we'll probably gain support off this level and get some nice movement back up for UTX tomorrow. UTX would be good to pay attention to. And you will be working off of, this will be key, you will be working off of a double bottom level with potential, any number of potentials for trendline breaks to the upside off this double bottom. It did succeed finally in breaking the downtrend line from the fall that was really got going at 84, kicked off by the failure at this touch at 84.20. Very nice. It did get above it, and it came down in some degree to try to kind of touch it down here, approach it anyway. Anyway, bottom line, this is a recipe for if you're staging above this final end of day downtrend with the open tomorrow, it could be messy for a bit, but you need to look for the trend line breakage to the other side for a recovery moving through the parallel channels. The parallel channel recovery with kisses goodbye leading into the curvature upward, which at some point can very well turn into, it stages that way and then it turns into a nice cradle, right? And then jams after having staged higher and come down and had to do a zigzag to get up there. It finally maintains itself in cradles, and you're looking for this if it can move past these downtrend lines. Anyway, that's a nice setup for that happening tomorrow. And like I said, on the daily pattern, we've got that horizontal support for a nice 50% retracement or even higher. Depends. But anyway, that's a good setup for tomorrow. Need to pay attention to UTX early. Okay. Let's see what else we got. Texas Instruments, relatively unaffected as well, moving upward, moving higher. 50% retracement off this N. You're clearly it loves being above 32 right now.